We'll get started in a sec. So if you've not been in here before on YouTube, like Woody, sorry, get your name right in a minute. Basically, we're just doing analysis of basically all the pairs and just look for setups, really. But if you've not been in here before, go and have a look at the position trading bootcamp on YouTube. That'll explain how I trade, what I trade with. So go and watch those videos if you are interested. Right, so yesterday, what happened yesterday? Just shut that down for a sec. Yesterday, Aussie CAD. So closed out Aussie CAD. I think there was 3 positions on that one there. No, it's just the 2. Yeah, so just close those 2 out from initial entry on Wednesday and Thursday. Close these 2 shorts out. S&P. Take that fib off. Yeah, S&P took a couple of positions off yesterday for profit. That one on the trading. US dollar CAD. Closed all those shorts out on the US dollar CAD. We're back up again today, ever so slightly. That was it yesterday. So, oh, hang on. Let's move that down. Can't see my minimize button. Yeah, so nice profit yesterday, but that was mainly on S&P. So today, news-wise, we've got virtually nothing. Basically, the yen conference and monetary policy statement this morning. We've had retail sales on the pound, which was positive, which doesn't really mean anything. FIFO business climate, and we've got FOMC Waller speaking this evening, which is unlikely to do anything. So that's pretty much it for news this week. So today will either be a profit take or flat as a pancake. Don't know. It depends whether the market's scaled out. It's end of quarter. It's end of year. There'll be a lot of profit taking moves happening, but they may well have all happened. Unlikely will happen next week because of the volatility will be very, very light. So next week, we've got monetary policy minutes on Tuesday for the Aussie. And apart from that, there's hardly anything until Canadian GDP and PCE on Thursday. But market's shut Friday. Well, it's not shut, but it's nothing's going to be happening on Friday next week. I know it might be shut, actually. I don't know. But I'm not trading next week anyway. So. Peter, handsome weekly profit. Today is options expiry. Yes, so we might get some action in New York, but it's. I would imagine anything that was going to happen this week has happened, basically. So you know, there's been a lot of movement this week, up and down, but we've not had any real pushes or squeezes or anything happening this week. So I think everything has been kind of scaled out of over the last couple of weeks. And, you know, this obviously new COVID variant has just meant that investors are not really interested in getting in. So there's been a lot less speculative trading, I think, more transactional trading, which is why we're seeing a lot of accumulation on things like the US dollar. But, yeah, so we'll see what happens with next week, but next week obviously there's a lot of volatility. So, but yeah, good week. Very profitable, mainly on the SPY. I mean, the SPY I've actually absolutely killed this week. Obviously, you know, I scaled in on 72 moving average, which is where I was getting, and yeah, just took all this move off of FOMC, just scaling into extra positions now as we're pulling back again. So unlikely we're going to crack 72 again. So just scaling in, ready for the next move up. But I'd like to be flat on everything. So the only thing I'm stuck in at the moment, and the only thing I've got on at the moment, is Aussie New Zealand. And I've just taken another position here. We've just come up today on the M15. We've just come up, pushed up a little bit into this gap. They may well come and take liquidity from these highs up yesterday's high. But basically, I've just taken an extra position there. We've just got a reversal alert. So looking to sort of wait for a pushback down into the range, really, on that one. Any of you that you're in Euro New Zealand still, we've just pushed up and we've just kind of taken out the high from Wednesday. There is a little bit more room for maneuver up to the previous high, but this sort of control candle on the daily that I drew in here. So since we put this big day in, we've not broken out of that range. So we're what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in this range now, stuck in it right at the top. So from a range perspective, obviously this is a perfect spot to start looking entries. We've just taken out that high. We may well come and take out that high. Failing that, obviously it's that daily control candle high, which is the next target. But whichever one of those you get in at, there's lots of targets to the downside to aim for, and fairly easy out if the move happens. So right now is a good time to get in if you're not already in it. If you're still in it and obviously need to get out of it, you're in New Zealand, then looking good. So let's have a look at the dashboards. Let me just go back out of that. What do you mean by easy out? Well, easy out is by scaling in with aggressive drawdown control if you're in and you want to get out. So you can scale in hard up here on Euro New Zealand, which will obviously, I don't know, it depends, obviously everybody's different where your average is. If your average is somewhere down there and you get in with a 50% aggressive position up here, your average is going to pull up very easily and give you an exit if you need to, obviously. So looking at the dashboards, ADRs today, we've only got 2 hit. Pound yen. Oops. Hit ADR low. We're just putting in a very nice hammer down there at the moment. So the yens, just a quick look at the yens while we're on the subject of yen. Let's go out to the hourly. All the yens, basically, we had this big move yesterday and continuation to the downside. So there's a lot of yen strength just starting to kick in now. So yen's powering up very nicely. The US dollar isn't really powering up, as you can see. The US dollar has been dropping, so this is individual yen strength rather than being linked to the US dollar strength. So this pound yen, obviously the pound is a short at the moment from a COP perspective, so we're looking for shorts on the pound at the minute, and obviously this is hitting to the lows, so it probably will play out nicely because the yen's very extended. You can see obviously on the RSI we're very extended on the 15, but not one that I'd want to take really. There's a really nice target on it up at the Asian lows, so it's very easy to get into, but obviously you can see the reversal that's miles away because we just had a really strong push down. So if we get some sort of bullish price action and then we make a new low and then get a reversal alert from there, that would be a nice entry back up into those. But it is counter trend for me as opposed to what Cot says, so not really one that I'd be looking to take. New Zealand dollar yen, however, is the other way around. New Zealand is a long, yen is a short overall. So nice looking entry on New Zealand dollar there. New Zealand dollar has been obviously doing okay. We've had some decent moves on the New Zealand dollar. Obviously against the yen, this is just the yen powering up, but this is basically an A-shaped, A-shaped recovery here that we're putting in back down to these lows. So there's a high probability of a bounce from there, at least a 50% bounce on that move. So nice looking entry. Obviously just look at areas where we're likely to pull back to, 38, 50 and 61 retracements. So yeah, really nice ADR reversal, that one. If you wanted to take that one this afternoon, I need to wait for an entry on it though. Entry is going to be there, which is roughly 17 odd pips away. Looking for half an ADR target, sort of 35 odd plus, but back up into the Asian mid-range, I would say, up to these 38 and 50 retracements. These gaps here basically would be your targets. So that one's looking good for a long. Obviously, New Zealand dollar has been letting us down a little bit with strength. It is meant to be powering up, but as you can see, it's not been particularly strong, but it is now looking like it's getting some market structure change. So we've pulled up, back down, made a new higher low, made a new higher high. This is a higher low, looking for a higher high. So market structure shifted on it. So we are looking much more bullish on some of these New Zealand dollars than we were. New Zealand dollar yen is exactly the same market structure. But obviously the yen at the moment is powering up. So we might get these lows taken out. They might just come down, take the liquidity from these lows and then run. So it looks good for a long, New Zealand dollar yen. But as I said, I'm not taking any new positions now, not this close to Christmas. So if you do want to scalp, it's a good entry. Obviously just wait for some strength. At the moment, there is none. So, and obviously we've got no news catalyst this afternoon either. So, okay, so that's ADRs today. There's only a couple hit at the moment. We won't pay any attention to the weeklies or the monthlies because we're at the end of the week and pretty much the end of the month. So 4-hour extensions, nothing, flat as a pancake. Everything that was extended on 4 hours is starting to play out. The ones we've looked at this week, the main one's been the euro pairs, wasn't it? It's euro CAD and pound CAD, wasn't it? Oops. Come on, switch charts. So yeah, this obviously got extended, hasn't managed to break down yet. The euro is still having a decent time at the moment, not against the Swissy. Euro Swiss is obviously a bit of an anomaly, but so yeah, the euro is doing okay. Nothing's going to do well against the yen, but it's still got a bit of strength, which is uncharacteristic for it. But if you look at it, we're not really going anywhere. So although the euro appears to be having some short-term strength, if you look at it, obviously, like Euro New Zealand is a prime example, we haven't got out of range for over a week, so it's not actually going anywhere, but it is moving, which is better than it obviously has been doing long term. It's obviously been collapsing, but we're right back up at this area in the 72 at the moment. Haven't taken out those new highs, so it's contracting at the minute, basically. So looks good for shorts, but at the moment there's nothing on H4 that's worth looking at all. So no extensions at all on there. And I suspect next week, it's either going to go one or two ways. It's either going to get massive volatility or we're going to get absolutely no volatility. So we'll see what happens. But either way, I'm not going to be particularly getting involved too much, but I'll be looking for shorts on the euro, obviously, based on what the euro's been up to recently. So yeah, nothing there. Hourlies, again, completely flat. There's nothing today on the hourlies either at the moment. So everything's pretty much mid-range at the moment. US dollar yen just hit ADR as well. So this yen push is continuing. So continuing to push down, bouncing off of ADR potentially, but obviously give these yens a bit of room. The yen is incredibly strong today, so wait for it to weaken if you're going to take any of these. But there's another ADR hit there, all yen based. So big strong yen. Just a quick look at the news, just see if there's anything been released, but. McDonald's claws back $105 million from fired CEO Steve Easterbrook. No, it's no yen news. this is off the back of the Bank of Japan press conference, basically. So there's obviously been something bullish said in the press conference, but it's not necessarily going to be a long-term move. But all setting up very nicely at the moment. So New Zealand dollar yen is my favorite of the lot at the minute, just because we're getting down to some very good levels. Will I still be doing the live room each day next week? I don't know, is the honest answer at the moment. I'm happy to, yeah. I mean, I'll probably just do a single session if you want to next week, but it's not really an awful lot going to be going on. I'll go through setups and everything. Obviously, we can do that, not a problem. But there's not going to be a massive amount going on next week. So I think I'll play it by ear. Maybe we'll do a Monday and a Tuesday and just see what it's like trading wise. And if it's flat as a pancake and horrible, yeah, won't bother. It's really difficult. Christmas is a very funny time. The week before Christmas, it's a bit like FOMC. It either goes completely flat and nothing happens, or it goes absolutely mental. So we'll wait and see what happens next week. But yeah, I'm happy to do them. We can cover other topics and discuss other things if there's no trading happening. But as you can see at the moment, we've got nothing set up at all. The market is going flat at the minute. There's no strength anywhere. There's no options really to get into anything apart from ADRs. And as I say, ADRs are a little bit more risky entries than normal. So I'm just not interested in getting into anything, particularly dangerous at the minute. The EA running H1M5 is basically flat now, pretty much. So we're up 15%. We're up to 4% at the moment this month. Just got one position on Aussie New Zealand, which it'll be out of hopefully sort of early next week. Might get an Aussie or a New Zealand move this afternoon, but more likely going to be happening on Monday. So I'm going to get that flat and obviously deactivate that as well, just so it's not going to trade next week. So I don't want it to get into any stupid positions and slippage. So, and I'll be doing the same with mine. So what I'll do today is just have a quick rundown of all the pairs. And then obviously if there's anything anybody wants to discuss or anything specific to look at, we can do. Buddy, later on, please teach me how to determine the bias from H4 timeframe. I can do that. Keep on arguing with yourself, yeah. Okay. Well, I can cover that now if you want. H4 depends if you're using the market reversal alert indicator. Obviously, H4 gives you bias long. So, whereas the last reversal alert is a short. So, the short-term bias at the moment in H4 is short because we just had a reversal alert. The longer-term bias, if you want to use moving averages, I would say is a short at the minute. But if you want to use the COT report, it's a long. So there's lots of ways to determine bias. You need to pick one, basically. The main ways that I determine bias are using moving averages, obviously, which is what most people tend to use. I use the 24 and the 72, which I call the institutional moving averages. So this is the 24-day moving average. This is the 72-day moving average. These are the institutional reporting sort of levels. So quarterly, 72 days, 24 is monthly. And if it's green, you go long. If it's red, you go short. So you could use that. If you want to use the reversal alerts indicator, obviously that will give you a bias of long or short. And then obviously you enter on the lower time frame in that direction. On the indicator, obviously you can turn on higher time frame. So you could use 4-hour higher time frame and turn that on. Oops. And obviously you can see the most recent alerts. So you could use that, but it depends how you want to, sort of trade. There's lots and lots of different ways of determining bias, but you need to stick to one. Whichever you choose, stick to it. So the problem you'll have is if you continuously look at multiple timeframes, you're going to find that you're going to confuse yourself. So I use the daily moving averages. This is a bad example because it's chop at the moment, but you look at something like Euro US dollar, it's a short. It's an obvious short, isn't it, at the moment? But market structure has shifted. So if you look at the daily market structure, we've put in a high, a higher low, and we haven't put in a higher high yet. So, you would expect potentially that. So short-term market structure is long, long-term market structure or long-term trend is short. There's all sorts of ways to look at it, but you need to decide. How do you look at the bias? How do you look at the bias for pound US dollar yesterday? It's a short pound US dollar. There's a long-term bias is a multi time frame thing. Yeah. So long-term bias, monthly, quarterly, yearly. Short-term bias, daily, 4 hourly, hourly, quarterly, monthly. What you have to pick how you determine bias based on the time frame. If you're getting into your trades on M1 chart, your bias is M5, M15, or H1. If you're getting in on M15, your bias is H4 or daily. If you're getting in on the daily, your bias is the weekly and the monthly. Yeah, you need to pick a higher time frame to determine bias, and that's going to be determined by the time frame that you enter on. If you're going to use indicators to do that. But, I use the Commitment of Traders report to give me a long-term institutional bias, and that's the way I tend to want to trade. So if the moving averages agree with the Commitment of Traders report, which is the open interest on futures contracts, then that's my bias. If I get a reversal alert in the same direction as those two, it confirms what I was thinking. Market structure is switching to the side that I'm looking to trade. But if you're trading on M5, none of that's going to make any difference because you're just trading chop. Yeah, it doesn't matter which way you go here. I can make money long and short on M5. It's irrelevant which way the market bias is because the market is going to go up and down. Yeah, if I went long down here, I'd have made money there. If I went short up there, I'd have made money there. Doesn't matter what that's doing, does it? But if you want to pick a bias, you need to pick a time frame to trade and use another time frame. Basically, there's a video on YouTube about it. The best pairings I find for trading. So I use M5, H1, M15, and H4. Those are the time frames that I trade. To answer the question, it's a little bit woolly, but it's difficult to be specific unless I know exactly what strategy you're trying to trade and what timeframes and how you're looking to trade. So, yeah, long-term and short-term trading, as Dee said, it's all down to your view and where you're positioning yourself. So, right. So let's have a quick overview of everything and where we are at the moment. So Aussie CAD was a short. Obviously, I got out of that short. So we've just pushed up. We got a really nice extension on the 4 hourly. You can see where I got in there. We were extended and second position as we came up and tapped into, or didn't quite tap into that resistance. No, we did tap into it, didn't we? Yeah, we double topped it. That's why. So I took second position up there and exited. This is obviously a short at the moment, it's Aussie is a short, CAD has flipped short on the COT report, so this is a short against a short still for me at the moment. So it's no real directional bias on it, but obviously looking at where we are, it's a short overall. So you could hold that, but obviously I get in and out very quick. So yeah, overall we're still looking for shorts on the Aussie CAD. Aussie Swiss is the same. We're looking for shorts. We've got a perfect 24 bounce just happened, 3-bar reversal at the 24 moving average, reversal alert, short, extended. So it was still short. Aussie dollar Swiss. So I've moved my drawing tools around. So the yen is a bit of an anomaly at the moment. Obviously, we've got a big yen strength coming through at the minute. It's difficult to determine what's going on with Christmas trading. So the bias I have from the COT report is obviously a short for the yen, and it's obviously a short for the Aussie as well. So I think that is still probably correct. If you look at the move we're getting in right now, we've got a lovely M forming with RSI extended, and we've just had a reversal alert as well. So any kind of pullback into there, be good looking for shorts. But obviously, bear in mind it's the week before Christmas, so they could well just pull back and consolidate until January. So it's very, very difficult to do analysis and anything meaningful at the minute, because next week is either going to be a crazy illiquid mess, or it's just going to contract, and you'll be scalping M5 up and down with huge spreads. You can't tell until the trading starts. It's very, very weird time of year, which is why I tend to get flat, because I've been caught out trying to trade over Christmas, and it's not fun. So but we are still short Aussie dollar yen. Aussie dollar New Zealand dollar is still a short. The New Zealand dollar obviously has been letting us down with strength, which has let the Aussie sort of grind, which it's still doing. We put some beautiful wicks in just before we got the reversal alert, and we're now retesting that. So as long as we don't break these highs, and it looks very wicky at the moment, we've had a doji put in, we're putting in a nice tail at the moment on H4. This looks like it wants to come back down. This area is sort of a balance here, this consolidation is where I would expect us to get into, this gap here. And I will probably just scrap it and scratch it flat there when it gets there. It depends. If it crashes through, then obviously I'll keep hold of it. But this is where I'd expect us to come and sit if we're going to consolidate. But we're unlikely to get a move on it this afternoon, because it's the New York session. These are both Australasian pairs, obviously. But yeah, short Aussie dollar, New Zealand dollar. New Zealand dollar is still a long on the COT report. Aussie dollar is still a short, although the Aussie has been powering up a little bit more. So we'll see what happens over the next couple of weeks. But as I say, with the COT report, you're not likely to see massive shifts in it either. There's not a lot of long-term positioning going to be done over the next week or so. Aussie dollar US dollar is a short. Obviously, we are expecting US dollar strength to come through. It's like anything with the US dollar at the moment, it's all going to be down to COVID and what happens. So if we get some more border closures and they stop letting everybody back in because Omicron's going crazy in America, it's going to affect the dollar. Everything's going to be affected by it. So again, we're entering into an illiquid period of trading over a period of time where there's less traders trading, and a period of time where the world is getting crazy again with a new variant. So it's just not happy trading conditions at the minute. So everything I'm sort of saying at the moment is based on what we're expecting rather than what could well happen, which is always the case, really, isn't it? Nobody knows what's going to happen to the market. So Aussie US is a short. The entry was, we didn't quite get the extension on RSI here. We got to 69.5, so we didn't quite get it. We did here. Obviously, we got benefit from the pullback there, but yes, it's a short still, but obviously it's moved on. So if we get the H4 reversal and then come back and retest it, that'd be when we'll be looking to get in short on it. CAD Swiss. CAD Swiss is a short. CAD is obviously a short at the moment. It's just coming down into support. So we'll see if this holds. If this holds, we may well get a bounce from here. So this is a very supportive area. You can see this, this has been respected many, many times. Every time we get here, we wick. We've bounced off of it multiple times. We're right down retesting it again. So this is either going to hold and we're going to pull back up, or potentially come back up to sort of the 24.72, or we're just going to smash through it. But it's all going to be based on what Swissy does. So obviously Swissy powers up and weakens as money gets pumped into it. So we'll see. But, you know, as I say, going into Christmas, I'll be more inclined to see the bounce and a little bit of a pushback up on it. CAD yen strength at the moment. CAD's a short. If the yen's going to strengthen up, the yen's going to beat everything. So obviously you can see the last time we had a pump into the yen. Sorry, bear with me 1 second. Sorry about that. So yeah, so that's the last move we had on the yen, and we got the nice 61.8 retracement bounce back and pushed back down. So again, we just pulled back on this move, 50% roughly. It's probably about 30 actually, 31.8. So look. Actually, yeah, 50. So we got 50% retracement, and we're bouncing back off of it again. So CAD's still weak, but this this is obviously yen strength that we're seeing at the moment, and it's not convinced it's going to be a continuation of strength. We may well just go into kind of a symmetrical sort of triangle and consolidate over the Christmas period here, and just sort of sitting here waiting for a New Year explosion in one direction or the other. So we'll see what happens with that one. Swiss yen stuck completely. So the Swissy's obviously just a horrible sideways mess at the minute. It's a range trader's dream, isn't it? But at some point the range is going to fail. That's really the top of your range there. So this area of support, when this area of support was finally broken, it acted as resistance multiple times. So this is your range high here. We've just tried to get out of the range high and failed. So we're looking at coming somewhere down here. But yeah, I mean, it's stuck in a range, staying in a range until it decides it doesn't want to be in a range anymore. So just treat it as a range bound trade at the moment. Obviously the yen is the short overall, and the Swissy, obviously when the Swissy powers up, it should beat the yen at some point, but at the moment obviously we're just a range bound mess, so it's range bound. Nice entries here, but we didn't get any RSI extensions, haven't had any for absolutely ages on it, so it's just not tradable at the minute. Euro odd, consolidating at the minute. Obviously euro is having a little bit of strength, not really going anywhere. Moving averages are flat, going sideways, not giving any clues as to direction whatsoever, so not really tradable. It's a short against a short as far as the COP is concerned. So I'm always going to be more short the euro than I am the Aussie. So I would be much more inclined to look for shorts on it when and if it gives you any opportunity. H1, you'd need it to get extended. It just hasn't got anywhere. We've not had any entries on this one for absolutely ages, and don't think we're going to for the foreseeable. Euro CAD, nice short. So we looked at this one, I think yesterday or the day before. We were getting right up to these highs, and it looks like now we are going to reach up and take them out. So once we get up to these highs, there's a good chance of it coming back down and targeting these gaps. Obviously, you see the move here. We had this last strong move on Euro CAD, pulled back, pushed up, and left all the targets behind for us. Came back, filled the lot. Missed that one. And we've done the same thing here. Very target-rich environment to the downside. So we're nicely extended. We've got nicely extended on H4. So potentially we're just putting in, just clear that up so you can see what we're doing. Multi-day M. So we're likely to stop hunt this level, potentially this level. It would make sense to take this, but it depends whether there's any positions left above there. Everybody that's gone short here is probably out. So there's probably not a lot of liquidity to aim for. So So yeah, Euro CAD short. Euro Swiss, another big short, obviously. This one started to power up. It's not managed to get, it's made a new high straight off the 24 though. So, I mean, it's a short for me, but we're completely sideways. The trouble with the Euro Swiss, as I've said many times, is it's the same currency, really. It's the two main European currencies. So therefore they tend to be very tight ranged. But when one either gets really weak or gets in control with strength, and it tends to be the euro because the Swiss has money pumped in and out of it constantly. Obviously, you can see this is basically just down to euro weakness, and it has flattened off in the last couple of weeks. You know, we've seen some decent, not decent euro strength, but we've seen the euro not being as weak as it has been. But there's no fundamental reason for that. There's nothing from an economic standpoint or from a COVID standpoint that would mean that the euro should be powering up anytime soon. So I think this is just a temporary retrieve before the next leg. So in this case, we're waiting for the moving averages. So you know, with these moving averages, what tends to happen is you either have price pull back to the moving average and then bounce off of it, or you have price consolidate and the moving average comes down and catches up with price and then pushes price back down. And that's exactly what we're seeing in this case at the moment, is a consolidation, and then the moving average has caught up with it. So similar move before the next leg. And as I say, there's no real reason, unless the euro steps in and does something, the ECB steps in and does something. I can't see the euro powering up anytime soon. So short again, but you just have to wait for extensions. It didn't quite get there. It did just about. So that was a nice entry. That was a really nice entry. It's just a shame that it happened this week. If this had happened any other week, but this week I'd have shot that. I'd be all over it. But I just don't want to get into any positions at the minute. Too close to Christmas. So euro pound sideways mess. You can see obviously we are in a big old range at the minute on this one. Not really going anywhere at all. We are just bouncing up and down. We're bang in the middle at the moment. So any RSI extensions to the upside, we're looking for shorts. Main difference with this one is obviously in the last 2 weeks, the pound has flipped short on the COT report. So we are now looking for potential pound weakness. But the pound is going to be stronger than the euro. So when the euro sits there sideways and neutral doing nothing because it's on its knees, and the pound has a reprieve and strengthens up, we'll see the euro pound drop. So I'd be looking for short opportunities on this at the moment. So any of those obviously would have paid out. So if we can get some kind of push and strength on the euro, or some weakness on the pound to push the euro pound up, I'll be looking for getting in for short opportunities. But at the moment, obviously, we're flat. Euro yen is coming down. Euro yen's obviously a short based on the euro being a short, and the yen is more likely to have some strength, as we're seeing at the moment, than the euro ever will. That was a beautiful short. And again, if it happened any other time, I'd be on it, but wrong time of year. Euro New Zealand, again, short. This is the one we were looking at a little bit earlier. So we've got this daily candle here, which is since we put this propulsion candle in, obviously we've been stuck within the range of that for days and days and days. Short in the highs, long in the lows. Well, actually short in the highs and then letting it drop. More likely this is going to come down. New Zealand dollar is still very strong from a COT perspective. Euro is dead. So perfect opportunity for a short right now up here. Any short. There you go. We're just doing a retest at the moment. There's a 3-bar reversal going in right now on M15, which is also a retest of the last reversal alert. So right this second, nice short opportunity, nice short setup. And obviously on the hourly, just keep an eye on the levels really. So this high. So we've just taken out this level. Perfect stop hunt. potentially coming up to ADR to take that level out as well. But those are both still within that daily control candle that we're in at the moment. So short it down to the lows and then wait for it to come back up, short it back down again. But more often than not, after we've had these consolidations, after these pushes, we'll see obviously the move reverse back down again. So yeah, Euro New Zealand, nice short. Euro US dollar, same thing. We're just pulling up into the 24. Haven't got extended on the RSI. We did get there. So there's a nice trade out there. But yeah, just waiting for a short on that one. We've got the 72. We've got a gap here, this big propulsion candle. Likely to want to trade up into that zone there. So we may get a further push. It's all going to depend on the New York session this afternoon, and as to whether we get any strength or weakness on the US dollar. If we get a weakened US dollar and hopefully an S&P push this afternoon, then this one could creep up to ADR. If we get anywhere up there, it'd be a lovely looking short. But at the moment, it's stuck in the middle. Pound odd, same thing, flat as a pancake. Just flip a coin, long or short. More likely a bit more long on this one, coming back up into here, and then potentially that. But you know, these could go either way at the moment. The euro and the odd are both short biased. The Australian dollar's powering up ever so slightly more as the pound is weakening, but and you can see that obviously this is why we're in the consolidation. These guys are really fighting it out at the moment, so not really in any extensions. There's no exhaustion on either of these that we can really trade. So pound CAD, big strong push. Canadian dollar weakness, and we're up at the highs. It's a short against a short, but I quite like this level where we are at the moment. We've just pulled up into an RSI extension, had a nice little trade there. Potentially we are putting in, it's not a very good head and shoulders, but potentially we're putting in a nice reversal pattern. So we've stalled twice. It's showing, it's this basically all over again. We're up at the 72. We know this is a strong rejection zone. We're hovering around there. Looks like a really nice short right now, but you know, again, this week is just, this is the last day really of trading. If it doesn't happen this afternoon, cross your fingers and flip a coin next week, because you don't know what's going to happen with liquidity or anything next week. So but technically we should be looking for shorts on this one, pound CAD. Pound Swiss is a short. Obviously the pound is a short. Look at that beautiful wick. Everybody, it's just, you can't really miss that. It's a beautiful entry at the 24, short, but it's obviously gone. So still short pound Swiss. Pound yen, it's a difficult one to call the pound yen at the moment. This thing moves very nicely because obviously the advantage of the pound yen is you've got the strongest euro zone currency against the strongest Australasian currency. So you get an awful lot of very, very nice price action, nice movement, nice market structure all the time. The occasional squeeze, which obviously gets reversed, most of the buyers turn into sellers. So whichever way you get into this, you will get an exit on it. So if it's basically just play the RSIs on it at the end of the day, just get in up there and get out as it moves down. So you can play this one from any direction. It's just obviously bear in mind, if we do get a US dollar or a yen squeeze, i.e. risk on, risk off scenario where money floods into the safe haven currencies, you'll get that. And that's exactly what happened on the Omicron announcement. So that's not October, that didn't happen. Obviously it happened here. Yeah, just be prepared. Obviously you can get into squeezes on the ends. So the ends are a bit more difficult to trade. Pound New Zealand. New Zealand dollar is a long, the pound is now a short, so be looking for short opportunities on this as well. This area of resistance is holding very, very, very nicely. So this support we've got from back here that we weren't interested in cracking, then we finally got to and went, yeah, no, we don't want to trade above that again. We are bouncing. Third time, 3 times a charm. If you knock on the door 3 times and you can't get through, likelihood is you're not going to. So we should be looking for good short entries on that. M15 just got one and a retest. So if you're not in it and you want to get into it, just pending sell stop under the London zone at the moment. And if New York's going to take it back down into here, obviously this is one of the gaps that didn't get filled on that pound news. Likelihood is we're just going to come down and rectify that. So good opportunity for a short this afternoon on pound New Zealand. Just take that off because I'm not going to get into it just in case, but that's what I would be doing if it wasn't Christmas. Pound US. I'm not using that as an excuse. I know I've said that quite a bit this week, but I have got a legitimate reason for not wanting to trade over Christmas because I want to have some time off. And I don't want a portfolio full of stuff I've got to watch all over Christmas, especially with liquidity. It's nothing worse than waking up to your drawdown jumping and then the next day it disappearing, and it's just, oh, it's not nice. But if you're in stuff, like I'm in with New Zealand, then yeah, you have to. So short on the pound US dollar, expecting some US dollar strength, assuming we don't get some kind of crazy COVID news that just makes everything go haywire again. But nice big strong move on the pound rate announcement, the unexpected rate increase. So we'll see what happens with the pound. It'd be really interesting to see what happens with the COT report next week. When did the news get announced? 1 second. It was yesterday afternoon, wasn't it? Yeah. Yeah, so obviously those changes in the rates for the pound and obviously the euro didn't change, but that's not going to be reflected until the COT report next week, because obviously the COT report reports from Tuesday figures and the news was released afterwards. So what we get to see this evening in the COT report won't be a proper representation of what the market has done after that rate announcement. So that's going to be next week. But we could see the pound rallying for a little bit, but I don't think it's going to hold up against the US dollar long term. So shorts, and we're back up at the 24. So same as usual, lovely spot to get in. We didn't get an extension on the RSI, unfortunately, but assuming that fails, look at additional entries back up at the 72 and any obviously easy gaps that may be targeted before dropping. So good opportunity for shorts on the pound US. The New Zealand's obviously all longs. Been looking for long opportunities on this for quite a few weeks, and they're all starting to play out. So all these New Zealand dollars, New Zealand Swiss, New Zealand CAD, New Zealand Swiss not so much, because obviously the New Zealand dollar, the Swiss franc will push when it wants to, so it's a bit more difficult to trade, but we are still long on it, so we should be looking for long opportunities. New Zealand dollar yen, that's bounced off nicely off of the 24, but obviously if this is the start here, if this is the new low in market structure and we are starting the New Zealand dollar push now, this is where we should be looking to jump in. This is a nice actual entry point down at support here. So failing that, obviously they may well come down and it might go range bound for the next couple of weeks, but then hopefully push off to the upside. But again, all dependent on Omicron. Yeah, safe havens will be pumped if we get some really bad news. I don't think we're going to. Everything that everybody's saying, I mean, we're seeing these figures in the UK where we've got record numbers now. There's 86,000 or something yesterday new infections. Hospital numbers are creeping up, but 75 or 80% or whatever it is that are going into hospital are unvaccinated. So, you know, we are the vaccine looks like it's very resistive to this. So yes, we are going to get a hell of a lot more people getting it, but nobody's getting really, really, really ill like they did with the previous waves. So I don't think it's going to be as economically damaging as before. Yes, we're going to get a lot more people getting a bit poorly with it, but that doesn't mean we have to shut everything down. So it's going to really be dependent on central governments as to what they decide to do. So if they decide to shut down waves of the economy, then yes, we're going to get some much more turbulence coming through. So things like the yen and the US and the Swissy, we will see money pumped in and out of those accordingly. Out of our control, those are the things we just have to assume a directional bias and, play it by ear really on those. So New Zealand dollar, US dollar, again, this one's a short really. New Zealand dollar is a long and the US dollar is a long. I'd be much more inclined to see US dollar strength. So I'd be looking for short opportunities on this. We haven't got any RSI extensions since back here. And obviously that's when that move started. So yeah, no opportunities on that one for a short. And obviously the US dollars, we will be looking for long opportunities at some point, but right now, obviously it's a massive long, as you can see, not so much against the Swissy. The Swissy basically is mimicking the dollar index, which is what it tends to do a lot of the time. And US dollar yen, these guys will battle it out, which is why you get into a range. So as we get worried risk on, risk off type scenarios happening, you tend to get these two battling it out, and that's where we get consolidation. So overall, though, should see US dollar beat it. So be looking for more longs than shorts. So this was the last entry down here. But as you can see, we've just had this horrible US dollar consolidation. So S&P, I played the bounce off of the 72 back here. And been scaling to longs all the way down here, took them all off up here. We pulled back, as you can see, I took some more longs off as we pulled down. We're pulling back down again. As long as we don't invalidate these lows, we'll be looking to make all-time highs. On the S&P, we get the Santa rally quite often in December. So I'm just assuming we are going to get the Santa rally this year. Might be wrong. But I'm scaling into positions as we're pulling back, waiting for the next move up. So, I don't need a lot to get out, well within an ADR at the moment. So New York is likely to pull back this move this afternoon. So still longs, always long the S&P though, never take a short on the S&P. For obvious reasons. So yeah, really nice 72 bounce. Whenever we get the 72 bounce or bounce, multiple bounce, we tend to get the next move. So next move. But obviously bear in mind, this is Christmas, could go all over the place. Volatility on light liquidity could mean we get some big wiki moves. So I will be a little bit cautious with it, but I'll be scaling in back down at these lows if we get down there. Just stick one in there actually. So if we do pull down to these lows today, I'll scale in and I'll be getting in again back down at the 72 at that gap if we get down there. But I think more likely this afternoon we're going to get the push. Wow, gold's off. That's interesting. Yeah, big move on gold. Big strong push. Got very nicely extended, but this is gold, and gold's this is why I don't trade gold. This is a prime example of why I never get into this. You get these massive pushes and these huge candlesticks, which is not a problem in FX, but when you're looking at something being a 1,894 pip move, or 189 pips. I mean, look at the ADR on this thing. It's way above all the FX pairs, and everybody tends to get into it with a similar sort of lot size, and so dangerous. So pushing up at the moment into these gaps looks like is what the move is. So once we get up into there, nice short opportunities, because we should be seeing some US dollar strength coming through based on the fact that the US dollar's had a drop. So when that happens, obviously that is going to push gold back down again. So the longer and harder this pushes, we're up above 75 at the moment, very, very, very extended on RSI. We should see a very nice retracement on the move. So if we get up to there, anywhere around there, you're looking for pull back somewhere around there. But not something I trade. Something over from Bitcoin, nothing, flat. Still flat. Still holding the 200 though. Just, what's it going to do? You know, Bitcoin is just really, really unreliable at the moment. So yeah, not a lot. Okay, anybody got any other pairs they want to look at, or any analysis in detail on any pairs that they're in at the moment? Anybody got any other questions? No. Let's just see how my EA test is doing. Oh, we're finished. 25, right, okay. I was just basically testing on the EA, the S&P aggressive set that I created, which generated £6 profit out of a 13% drawdown. So what I've done is just doubled the target on it to 2 ADR. So literally, I just wanted to see what happened if I went to ADR as a target. Not made a lot of difference. So £7 profit instead of 6, but an extra 10% drawdown. So I was just trying to see if it was, obviously with the S&P, it tends to go on runs, but what the EA is doing is kind of making its profit, most of its profit on these moves. Yeah. So when we get these pullbacks, these are the moves it's making its profit on. As you can see, the time it takes to move to ADR is a lot longer. So what we get is less trades taking a lot longer to play out, rather than hitting ADR quickly, taking additional entries on sort of pullbacks. So with this one, for example, here's a good example. Would have got in here, may not have got out there, would have got out here. Yeah, so that's the 2 ADR way, this way. The 1 ADR way is getting in here, getting out there, getting in again there, getting out there. So it's actually taken 2 trades, made twice as much profit, but wouldn't have taken as big of a drawdown because it would have been in less positions because it gets out faster. So hence all it's done is made a little bit extra money, but gone into drawdown. But like I say, I'm comfortable with 25% drawdown on the S&P. But what I wanted to see was a hell of a lot more profit than the other version, which it doesn't. So I'm just going to stick with the 1 ADR target, which gives me £6, 60% return a year instead of and 13% drawdown, which is obviously a hell of a lot nicer to live with. And what I could do is obviously double my lot size, go into 26% drawdown and take £12 profit, 120% profit. Makes much more sense to have smaller targets, larger lot sizing, and then obviously the compounding will build the account faster as well, which is what I'm looking for. So yeah, so that didn't work. Never mind. I'll stick with the old one. The old one works. No Santa rally this year. Yeah, no, we should have a Santa rally. We always have a Santa rally. We don't always have a Santa rally, but we quite often have a push. But you know, the Santa rally tends to happen next week. Typically, it's a weird thing because the S&P obviously goes up. Yeah. It's linked to the top 500 companies in the US. The top 500 companies in the US keep making more money, therefore the index will keep rising, and that's inevitably what it's going to do. The Santa rally is, I don't know whether it's kind of not so much a myth, but obviously month on month the S&P tends to return a positive return. Sometimes it doesn't, obviously, because if you catch an entire month where you're having a pullback, which is rare, you will get a period. So here's a good example from 3rd of September to 10th of, sorry, so it's that 3rd of September to 3rd of October is there. So there's a down month. Yeah. But then you look at the next month, it was an up month. Obviously, because we had one down month, then we follow with an up month. What tends to happen is all we do is end of year, we make new all-time highs. So, pretty much every month it's making new all-time highs. That one it didn't, that one it did. All-time highs, all-time highs, all-time highs, all-time, might not have done that month, all-time highs, all-time highs, all-time highs, didn't do then, all-time highs, all-time highs. And all it is just the continuation of all-time highs. It just so happens in December, and we quite often get a pullback at the end of the year. So that's the Santa rally. It's just making all-time highs. The thing is, it tends to, weirdly enough, happen just before Christmas. And look at where we are. All-time high. Yesterday, attempted all-time high. Just about made it by virtually nothing. So next week, all-time high. That's your Santa rally. All it is just continuation of normal movement. It's not necessarily any stronger than normal, I don't think. And it's just the fact that all the S&P does is continually make all-time highs. That's its job. So, but all-time highs, yeah, Santa rally. But we'll see. We could well pull back. We don't get pullbacks below the 72 multiple times. It just doesn't happen very often. It does occasionally. Yeah, we don't, when we pull back to there's an example of when it happened. We had a pull back to the 72, then another one before we pushed. Obviously, that was a crash. Pull back to the 72. Yeah, COVID. Pull back to the 72. We had a couple. But not before you make an all-time high. It's rare that you pull back to the 72 twice without making an all-time high. It does happen sometimes. Yeah, so we could be seeing a pullback without an all-time high. Who knows? That's why we space our entries accordingly. If it comes down and cracks the 72 again, and I need to get in down at recent lows, I'll wait for the next all-time high, and then I'll start to get out. So, but let's fingers crossed for a Santa rally. Santa always delivers presents, doesn't he? He doesn't deliver crap. So, weird one for you. How do you get your trade manager dashboard to appear at the top of the screen? Mine appears at the bottom. What, you mean down here? Yeah. You adjust the window. You can't see it. What is it? Foreground. Yeah. So all this is the dash appears in an indicator window, like a stochastic or an RSI. So it's just another window, like a MACD. You can adjust the window. All I do is put it at the top. Sorry, I should have said that. But yeah, that's it. It's if you want to use it on a chart. I mean, this thing I keep saying to people over and over again, all of my dashboards are designed to go on a chart on their own with nothing else. They are dashboards. They're not to be used on a chart with patterns. They're alert dashboards and they're monitoring dashboards. That's all it is. So yeah, there you go, magic. But yeah, you can't obviously see it. It's an optical illusion because I make it all white. Tricks. Right, so that's it for today. I haven't really got anything else to cover. What's my Aussie New Zealand doing? Still pushing. Still up there. So hopefully this is just a retest of the reversal. We just filled that gap nicely. They may come and take out the highs. We're not at the end of obviously the London session just yet. So we got another hour until New York opens. So we'll see what happens with that one, but it'd be really nice to get out of that one today so that I'm flat, 100% flat apart from the S&P positions until Christmas, but we'll see. Anybody got anything else you want to cover? Any other questions? Obviously, make sure with your trades, as usual, go and stick your trades on your chart from the last week, just like I did, obviously, with these. So drag all the trades onto the chart, go and have a look at them, see where you got in, see where you got out, see what happened after you got out. That's a stop order. Just so you can see, obviously, how your positions are playing out. This is kind of like journaling. This is my version of journaling. So, got into my positions well, followed the rules, got out at levels that I was expecting to get out at. Yes, it continued, but, you can't get all of the profit on a move, and if you try, you will invariably have it go against you and get you into trouble. So you take your profit when you're happy with the level of profit you've got, and then forget it. It's done. Trade's over. Don't beat yourself up if you missed half the move. It doesn't matter. As long as you're putting money in the bank and making green every day, that's all that's important. Just building this pot to make sure that you can use this pot for drawdown control if you need it. But obviously go and look at your trades. It's always good to see, did I get out too early on these trades? Did I get out at the right time? Did I get in, more importantly? Am I making sure I'm getting in following my trading plan, getting in when RSI is extended or whatever strategy you're using? But always do this every single week. Have a look at what you did. Was it good? Did I get in well? Did I get out well? And the more you do it, the more you see it, the more it will sink into your head, and the less you'll worry about being wrong in your positions, because you'll have seen over and over again you getting into trouble and getting out of trouble. And that's what it's all about. Did I get out right there? And that was my plan. Take, roughly half an ADR off the position. That's what I did. But hey, never going to get it right every time. Okay, so that's it for today. Live to fight another day, exactly. I will be around next week, so we'll play it by ear, I think, next week. I get the feeling just from, from years gone by, we've got an extension on RSI on the hourly on US dollar yen. It's come off of ADR perfectly. Perfect ADR bounce. I just get the feeling we're going to look at the dashboards sort of Monday, Tuesday next week and just go, not happening. And if that's the case, then I think we'll just go, right, well, it's Christmas. I'm not getting into any positions. I'm going to have the EA turned off. So I'll basically just be flat as I can on everything. So somebody just asked, let's talk more about mean reversion. Tested the H1M H1M5 file you posted and results are not very promising over a year of testing. My testing showed 100% profit on everything, but anyway, original H4M15 have better results. Yeah, you can use that if you want to use a higher time frame. H1M5 works very, very well. Obviously, it's not going to work on every pair. You're going to get pairs like the yen pairs and the Swissy pairs, which are going to be way more volatile. So you want to be getting into those on higher time frames when there's been stronger moves. So, you know, but everything is going to squeeze at some point. And with the H1M5 strategy, I tested on all 28 FX pairs, and it performed very well on 60, 70% of them. And those are the ones I trade. The ones it didn't trade well on were typically the yens and the Swissies, because you get money piled into those, and obviously you get squeezed hard. So you'll go into much more drawdown on them. But with those set files, with the H1M5 specifically, if you get into large drawdown and start to get uncomfortable, then you just do manual drawdown control on them. So you need to obviously monitor. With the EA, I don't leave the EA running on my chart and not pay attention to it. I'm watching this P&L constantly on one of my monitors. Well, in a portion of my extra large 40 whatever inch monitor it is I've got now, rather than the 6 I had before. It's much nicer having one big monitor. So yeah, you monitor it. Yeah, and if it gets to a level of uncomfortableness, i.e. with me, if it's getting into 4 or 5 positions and we're getting sort of around about 3% of drawdown, then may start to manually intervene. But you can let it do its thing. But yeah, backtest. If you find you're getting results which aren't working in backtesting, they don't work. But obviously backtesting is no guarantee of future testing, obviously. So, you know, it's like any strategy. I can give you the best strategy in the world that's worked absolutely amazingly for the last 15 years. Next year it will lose and blow an account. You know, it's trading. You have a strategy and you follow that strategy. Mean reversion works extremely well. Million ways of enacting mean reversion as well. But if you're going to position trade, you need to monitor your positions. That's what it's about. You're a position trader. You're not trading with a stop loss and a TP where you can set it and forget it. Just, you know, you'll get stopped out the vast majority of the time if you do that. That's what stops are for. They power the market. If you're not using stops and you're position trading with small positions, you need to monitor your drawdown, and it's down to the individual to manage that. But you know, these are the pairs here that I trade with the mean reversion. I've added this in because I wanted to test these two together, because these tend to be currencies that will squeeze around the same time. I wanted to test these two together because they do, like the US dollar Swiss, you tend to get quite a lot of that sort of movement. But, you know, every single one of these pairs, I've tested over a 2-year period on tick data, never faltered. So those are the ones I trade. But if you've tested it on other pairs and you haven't got those results, obviously, yeah, I mean, you'll probably, but that doesn't mean you can't use them, obviously. You know, it just means that those will get into bigger drawdown. You just may have to step in and do some manual drawdown control on them. And obviously, by doing manual drawdown control on those pairs, you will instantly be reducing the lot size and the drawdown, which will make the exit easier for the EA. So if you're trading a pair and it pushes against you and you've got entry, 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 if you remove that entry and that entry, the average is there. Mind you, that it would have been there anyway with those, wouldn't it? But if you move that one and that one, your average is now up there. So the exit for the EA is much easier. But like anything, if you're finding it more successful with H4M15, yes, it will be more successful because you've got a lot less chop. On H4, you are trading stronger moves and longer moves, which will tend to have stronger and longer reversions. So it's easier to trade. you're going to get a lot less entries. The only reason I'm running H1 M5 for December, and I have been all month, is because I wanted to trade more chop, because December is typically a month where we get a lot more consolidation. As you can see, it's exactly what has happened this month. That's what happens in December. So I've been trading H1 M5 because I can get into a lot more positions a lot faster on mean reversion and milk it, which has worked very, very nice. But yeah, test it. That's what back testers are there for. The EA has 1,000 settings. You can set it up to do pretty much anything you want in various different ways. So if you're not happy with the way that it works, then that's not the set file for you. Everybody is different. Yeah, and Peter's just said he's trading H1 M5 on CTI. The H1 M5 strategy is very risk averse. Yeah, we are getting in on that strategy on 75 extensions. So we are literally only getting in here and there. Yeah, so you can see US dollar recently, in the last couple of weeks, you haven't had an entry. Last entry on the US dollar you had was there and there. Yeah, so you'd have got in here, exited there, you'd have got in here and exited on the Powell speech. It doesn't matter how you exit. You may have got in there. Difficult one. You may have got in there. Unlikely, actually, but you may have done. But if you did, you got in there, you got in there, you got out there. So, it's horses for courses. But because we are using such extreme moves to enter, you are going to get a lot less trades than you will with most of the other set files. But when you're trading with prop firms, you want high accuracy, and you want low drawdown, and high extensions on RSI for mean reversion are low drawdown, but obviously much less of them. So for me personally, I'm happy to get in with much bigger lot sizing, higher extensions, just because I know they work out much better. But I'm happy to sit there and wait. I'll sit through drawdown for a couple of weeks if I need to. It always pays out. Always pays out. It's just, you got to wait. But things like euro pound, you always get your exit at some point. We're not going to get any to the downside on that at the moment, but that's, so with, when you're trading CTI, for example, if you're looking, what is it, 4-5% drawdown on CTI, if you got in there and you missed an exit because it didn't quite get to obviously whatever your target is, that is all the drawdown you would have got before your exit. So, when you measure it, and this is the reason I love the M5 H1, is you'd have got in probably on that candle there, you'd have got in somewhere around there. Your drawdown is 38 pips on a 52 ADR pair. It's not even moved an ADR against you, and you're out. So, as Pete just said, I intend to employ H4 M15 at some point. Do it. H4 M15, just need to back test it. But again, if you're going to go with a prop firm, go with the higher extensions. I've back tested H4 M15 on 75 extensions, and it doesn't take many trades. But when it does take the trades, no more than 3 entries, and you're out. So it's not going to set the world on fire, but it's all about building a portfolio of entries. And obviously you've got to use a stop loss with CTI. So you just set your stop loss 3 ADR away, and occasionally you're going to get a stop loss hit. But that's what it's all about. And this is what people don't understand. It's about the grind and about making money long term. It's not about getting in and getting out on that 200 pip move, making 50% account growth. CTI will not fund you if that's your plan. Go to FTMO. They'll let you in. They'll take your money. All prop firms are equal. Not. So yeah. I mean, you can see obviously the extensions. If you'd have got in on a 70 extension, you'd have got in here. On a 75 extension, you got in here. Yeah, big difference. Big difference between the 70 and the 75. One shot entry, 1, 2, maybe 3. You know, it makes a big difference. But like I say, you know, since then, you've had 0 opportunities to trade. But it doesn't matter. We've got into other stuff, haven't we? So, but yeah, back testing, back test. That's what it's all about. Giving yourself the confidence to get into the positions. So, right. So if nobody's got anything else, I will call it a day there. As I say, I'll be back on Monday. What I'm going to do in January is start running, I think, 2 sessions a day. I'm going to do a morning session at 8:30 UK, which is obviously for the London session. And then I'm going to do an afternoon session, which I'm probably going to start at 2 p.m, which will be for the New York session. So looking at setups twice a day. If you can hear this low grumbling in the background, by the way, I'm having my patio dug up. Not to look for anything, just because I'm having a new patio. So that's what that noise is. It's just I can feel the floor vibrating. You know, when they're using a jackhammer, literally my desk is vibrating, the floor is vibrating. I've got every door in the house shut, when you can just, this constant vibration going through your body. It's mental. Anyway. Okay, so yeah, so that's the plan for next year. From January, we'll probably do 2 sessions a day, slightly different times. The morning one will probably be quite a quick one, because it's just having a look at setups, potential setups, where we are, what potentially to look for during the London session, and then the New York session, same thing. And I'll probably start to do some scalping in the New York session on S&P. Just because I like scalping again, I've got back into it. So I'm going to set up multiple accounts. I'm going to have a scalping account, which we can do some scalping on M5, potentially M1 at some point in the new year as well. Okay, so that's it. Yeah, okay. Have a good weekend, everybody. And if you're giving up for Christmas, have a good Christmas break. But if you're not, I'll be back on Monday, same sort of time, 12:30, and then we'll see how we go next week and play it by ear. All right, have a good weekend. If you need anything, come into the Telegram group and ask away. Otherwise, have a good one, and I'll see you on Monday.